Good morning, traders. Welcome to the TMT Stock Market Strategy video for Friday, April 8th. All right, guys, interesting developments yesterday. We had an inside day from the previous day, so price action really didn't do too much, although there was a small little pop in the market where our trading room and our algorithm caught. I'll show that to you in a moment. But most importantly, we had some real nice movement in the after hours when Donald Trump ordered an airstrike on Syria. Markets were down about 12 handles at one point on the ES, and then we've obviously been buying the dip as we speak. We'll see what happens, but I want to go through the calendar real quick, and then we'll do a quick little recap on what's to come and where our levels are on our daily chart. And I'll show you a Pro Trader Premier video levels as well as we do this for today's trade. And today's going to be one of the videos that we put out for you guys. Now, I want to show you, very careful. Today's going to be interesting, and I'll tell you why. Non-farm payroll numbers come out 8:30. Okay, this is really important. This is going to be a market driver telling us, and it really isn't the number, right? It's not what the number is. It's how the markets react to the number on any economic number that's announced. Okay, so just keep that in mind. And also, we're going to see and pay attention to the CFT report, which is the commitment of trader reports. And of course, we're going to dissect that for you guys on the Pro Trader Premier side as far as producers short or long gold and of course crude oil and what their status is. That's very, very important for trading, for those of you who like to trade gold and crude oil. Okay, so we're going to be dissecting that. That'll be for Monday's research report. It comes out today at 3:30, so I'm going to get a full analysis, and we'll hit that with you guys on Monday. All right, so now let's get right to it here. Interesting stuff. Let's take a look at a couple of things. First, this is what we had here in our trading room yesterday, along with our Pro Trader Premier guys. This is the subscribers. We had a nice little long signal right off of the TMT levels here. You can see that, and then of course our algorithm had a long entry at 26.35. You can see that little green arrow into that zone. We hit that zone twice. It held, and the algorithm decided to say it's time for a long trade into YM, and sure enough, it was a beautiful little trade. That was pretty much the trade of the day. And again, if you're a novice trader, you might not have picked this up, but it gave you plenty of time here. You got the buy entry here. And now you're just waiting for that long trade to happen. So hats off to those guys in the trading room. Did a great job. And also look at these levels. These are the Pro Trader Premier levels that I'm showing you guys. That it's, you're talking $69 a day. That's $2.30 a day to invest in your trading. It's absolutely crazy. These are professional trading levels that are populated by our algorithm. And of course, I wanted to show you this. This is the ES as well. Very similar in price. Right off the level. I mean, you're talking 5 handles here, guys, in a matter of half hour. I mean, it obviously doesn't happen every single day, but the levels are bar none. You come into the trading room, you can take a look at our Pro Trader Premier levels as well. That's $69. And if you really want to get something that's extraordinarily value, take a look at the daily strategy video for $15. That's 50 cents a day. 50 cents a day for daily levels, which I'm going to show you now. Okay. Anyway, let's get right to it. Nasdaq daily 54.83 is going to be the high. That needs to get taken out. That is very weak, very little. If you look at our volume zones here, very little resistance. Now, remember, we're looking for the markets to do one of two things. Either have we completed our fourth wave minor pullback, and now we begin and we continue our fifth wave final move of this whole bull market run, which I believe may end sometime in July through October. We're still iffy on time because we need a lot more time to really dissect this. Or could this, war, if you will, quote unquote, start hinder the market and really take this fourth wave and make that a fifth wave completion, and then really start to move lower? Okay. Well, this is all negative divergence. You can see this here. This is not a good sign. Negative divergence continues to creep up in all of the 5 indices that we follow, which I'm showing you now. All right, there's no strength to momentum in here, and although price is gravitating higher. But what happens when you get price to gravitate higher, these little candles, you get 2 or 3 of these big engulfings and wipe out the whole month, maybe 2 months. So just keep that in mind. But these levels are valid. Okay, they continue to be valid until price takes them out. All right, that's the NQ. Here's crude oil. All right, we're above the TMT proprietary price channels here at 51.56, and then the lower end of 50.70. That's two areas of support. We're just hovering above that. If we can break back above Wednesday's high, then I think you're going to have a beeline shot to 53.82. Believe me, guys, I don't know why. There's no reason why oil should be at $50 other than, of course, the interest of these worldwide oil-producing nations that need oil. Because if you go and do, and I'll put out a report for you guys, every nation needs a certain amount of dollars in order for them to be profitable in crude oil. Venezuela needs like $60 oil. They've been losing money. They're in dire straits. Where Saudi Arabia needs 12. It cost them $12 to get the oil out of the ground. So it's in their best interest to keep this thing elevated. But there's so much supply. I mean, you step on a rock in Texas and it's all over the place. I mean, literally. But you try to be facetious here, but this is what I'm talking about. We'll see what happens on the commitment of trade reports on Monday when we produce them on Monday. All right, but these are your levels for today's trade. All right, now I still think this is corrective, and if we get back above, we start really taking out this high here, then this may be something for real. But other than that, I think maybe we'll come back in again. Let's see if we make a higher low from this previous low. And then if you want for a trade, then I think it'd be a better spot to go buy it. On the Pro Trader Premier videos, obviously, we're giving you intraday levels. ES, okay, so this is what we were talking about here. We're looking, is this a fourth wave pullback, right? And we start to move higher, or is this fourth wave actually the fifth wave final of this move and we start to really break down? That's yet to be seen. But what we have identified, and right now is still happening, is this fourth wave, which we have a lower high from this previous high and another lower high from this previous high. But what this is looks like a nice, well-defined bull flag. Still bullish, although the ES is one of the weaker ones, we're still holding to TMT proprietary price channels, and these are your support and resistance levels, okay, for today, and continue will be, and it will be until we take out the areas of price, okay? But look, negative divergence happening again. Very, very poor internals. The internals are very poor right now, and even though price is hanging in there, and that's where we come in to try to identify for you quality professional research. So if you are swing trading longer term accounts, the daily strategy video would be for you, because this is what we do off all the daily levels, where the Pro Trader Premier video are more active traders, okay? And we put out a beautiful research report for the institutions as well. Next is going to be gold, and the swing high here has got to get taken out, 1267.20, for me to believe that this is for real. Once we get a risk-off event happening, gold should start to roll over again. We do have a gap area of support down below here, sandwiched between these two pivots. So keep an eye on gold. Gold is up pretty big today, and if it does take this out, guys, then this could be for real. I mean, this really could start to really move higher again. Gold is notorious for getting everybody long and shaking all the weak longs out. So I'm looking for that one big shakeout, and that could happen between now and June before we get a really big sell-off, or I should say a correction for that matter. The problem, what I don't like about gold, as you can see, gold is really moving not too much, is GDX. The miners move first before the metal in the beginning stages. I do think gold is in the second stage bull market. You guys heard that from me many times. But we have some areas of resistance that really need to get taken out here, guys. 24.37, that's that neckline, coincides nicely with our TMT level. Then we have 25.06 and $26. This swing high pivot. Now, we did break back out, taking out this little swing high here, which is fine. We just need a little bit more momentum to the upside. And then maybe GDX, maybe this serious strike could really get GDX and gold miners and the gold stocks really moving. So that's what we'll be paying attention to for today's trade. All right, let's look at the bonds, the ZB 30-year. Again, guys, you guys heard this before. Dead money for me here until we take out this area, 157.36 to the upside, or 146.50. Now, we've just been chopping around here, creating a nice base. Now, this base could, either way, could break down or break up. We have to wait for price to happen. If we break up, the gap area of resistance here is going to be the target, and I'm looking to be a better short seller in bonds. Yields are rising. They have an interest rate rising environment now. I think yields have bottomed in last July, and I think that they're here to stay. I think bonds have ended a 30-year bull market run. So any big move in bonds, based off like a fear, for instance, like today, that's something that you might be interested in looking at. But I do believe anywhere up in these areas, there would be a great shorting opportunity in ZB. TLT, which is the ETF, same thing. The chart looks the same. Just we have a 200-day here that needs to really get taken out. But other than that, guys, you see we're just chopping around here, doing not much of anything. Although we are making higher highs and higher lows in MACD and RSI, it's just that it's a little too, to me, dead money again. All right, let's take a look at the spiders, and as you can see, spiders, same thing. Here's your resistance and support level. We do have this big bearish rising wedge happening, and we're still within the wedge. So this bearish pattern doesn't kick in until we break the pattern and trigger this pattern. So right now we have a pattern that hasn't triggered. We've been sideways pretty much for the last 8-9 trading days, with certain little areas of pullbacks and little pops and sell-offs. But other than that, we need to take out the lower trend line, which coincides nicely with this 50-day moving average. So this really needs to get taken out for more further downside. Your really big target is going to be right in here, the 224.47. That's going to be that 200-day moving average as well. But look what's happening. RSI, lower lows, lower highs. MACD, same thing. Really not doing much of anything other than staying within this downtrend line. Okay, so bearish. We have negative divergence in all of the indices that we follow, so that's not really a good sign. Actually, especially in the transports. Here's the IYT, the transportation ETF, and you can see here we've been kind of hovering around since late November at the upper end of the range, and now we're making lower lows and lower highs here. Here's all your levels for today's trade, right? I think we take this out. Next target will be the 146.41, which is the upper end. Look at the volume zones here that we're looking for. But we need to get down below. Right now, the indices are kind of stuck in their ranges, which they have been doing since last July. So we need to really start moving. If we break down, then I think all of the indices will follow suit. This is our leader here. Our secondary leader, which is the IWM, the Russell 2000 ETF, it is also making lower lows and lower highs, breaking down pretty miserably here. You can see that. So this is not a good sign for me in the overall strength of the market. Does that mean that we go out and short the market? No. We actually stick with what the trend is for the day, for the traders that trade actively in the course of the day. For the swing trader, I would not be looking to add any longs to any of your positions. All right. Would you look to short? I would look to be neutral at the moment until we see which way this market is headed, because we want to identify, have we pulled back and this fourth wave minor pullback starting a fifth wave blow off, and what we say is called a capitulatory top, a blow off top. So we still wouldn't want to get short, because we want to get short at that time. So right now the indices are waiting, and we're waiting for an answer from them, meaning the indices, to tell us which direction we want to go to. And last is going to be Qs. Now, technology did really well, has been doing well, but the PEs in this market is 26.3 times, very expensive. Technology, Amazon, Google, Facebook, Apple, extremely expensive. No reason to be buying stocks here. If anything, we look for entries to start looking to short, and that's going to be relatively quick. Have a great day, everybody. Enjoy the weekend, and we will see you on Monday.